Hello, this is Dave, and welcome to Equity Story. I'm with the amazing Mr. Wolfie, and this is just a general share advice and not personal, as per the disclaimers you can see here. Wolf, a lot of stories out today, so you're looking a little bit exhausted, actually, mate.
Yeah, I need a break.
And you're going to have more out tomorrow. Okay, champion, let's get going, because you had a number of gold stories that came out first, right?
Yeah, so let's look at some of these quarterlies, because it's interesting just reading to see where they're all at, right?
Okay, so Northern Star, which is again moving up pretty nicely at the moment, and really moving up quite nicely as a gold price. How are we happy with the numbers?
Okay, well, let's look at the numbers, and I'll give you the thumbs up or thumbs down. So for a company that's really a market darling, I'm struggling to understand why, because the costs are AISC is at $1,800, right? Which is not super low. Like NCM is about 1,100. You've got EVN at 1,200. See, these guys are $600 higher than they should be. I think we could do better than this.
I'm just having a look here. Which was the one in particular that pulled them a little bit higher? Kalgoorlie.
I think you can see they're all pretty much similar, aren't they? Except I think the US one is probably bringing them up, because Pogo, they've done it in US dollars. So 1668 converted to Aussie dollars is probably about 2,200.
Okay.
So that's what's probably bringing them up to that's 1813.
A little bit higher. But even so, it's easy. It's interesting, isn't it? That where you've got those, they are a little bit, Yandle's a little bit better, but you can see they're certainly not, sometimes, Wolf, if it's one mine and you think, well, maybe they're just mining a difficult part of the mine, you sort of get away with it. But Kalgoorlie is towards the end of its mine life, isn't it?
They keep saying that, yet it's been doing and going 3 years plus, right? But it's interesting that a market darling, the costs, AIC costs are not that low, are they?
No.
So it's not my favorite one. Yeah, sometimes it trades very well and you've got a nice chart and you can trade it. But if I'm choosing purely on quality, I'm not sure I'd probably go there.
All right, just really a gold play. So fundamentally, in your eyes, I'd argue in some ways, if you've got something like Evolution, it'd be a sell.
Yeah, if it's run under puff, I'd be probably taking profits on this.
All right, now let's have a look at Newcrest, which is a similar bigger gold play.
Yep.
How did they look, Wolf?
Well, look at the actual quarterly, and you've got cash costs. Sorry, AISC costs. God, I always get a tongue twisted with that. Of 1,012, right? I mean, you can see the difference between the two. Massive gap.
Right.
You can see why Newmont is buying Newcrest and no one will ever touch Northern Star.
All right. Very, very good, Wolf. All right, let's have a look at CAI. Looking awful looking chart, Wolf. Did the numbers come out and give any sort of
Okay, let's have a look at CAI, Colliden, right? So this is one probably we never look at because maybe of the chart. But they've come in with 15,000 ounces produced, which is fairly low, which is what equates to about 60,000 annualized. So it's fairly low. And as a result, the AISC is about $2,000. So not super low, but it's still, should be making margins of about $400. It's not bad, but it's just not a big enough thing. That's why it's probably under the radar and trading like it's trading.
And again, DCN not looking too good either, Wolf.
Well, let's have a look at that one, right? So Callidus is definitely not my cup of tea. DCN, let's have a look at that. Apologies, I'm just opening up all these announcements so I can quickly run them through for you. And DCN, is very small production of 9,000 ounces, AISC of 2,452, Dave. So this one's a bum bum.
Right, definitely. I mean, RMS.
Okay.
Come on, give us some good news, Wolf. Like, are they all?
Isn't it that we don't have much really good quality stories in gold here in Australia? This is why it's interesting to go through these quarterlies and see, okay, what stands out to me? And so far, Newcrest is the only one, really. That's why they're being taken over. So RMS, quarterly production of 54,000 ounces, which is annualized about 200,000, which is not bad. This is a decent gold producer, and AISC of 1873. So
still on the high side, right?
it is. I mean, if below 2,000 is probably now the mark. You have to be below 2,000, but 1873 probably like a almost like a NST, which is neither here or there for me. You can trade it, but not with much confidence.
RRL.
Okay. So another one of those gold producers, probably similar in size to RMS. Let's have a look at that one. And they've come up with gold production of 100,000 ounces at 827. So again, very similar to RMS, NST, and they've got about 400,000 ounce production on their books, right? So again, double the size of RMS, similar numbers. Again, it's probably neither here or there for me. Prefer EVN for sure.
And RSG, again, I think it's another similar size, isn't it?
Yeah, let's have a look. I know it's been going up, right? It had a pretty good.
I think they were a little bit better, weren't they?
Yeah, well, there you go, Dave. I mean, you can see why it's been going up. So the gold production is 92,000 ounces, and then AISC is 1453. Already you're going, okay, well, this is much better.
Yeah, looks very, very good. And just to explain to members of the Equity Story, yes, there could be the cost of getting that gold out is there's no other, apart from maybe being a difficult part of the mine, there's no other one-offs that can affect that. It's not like they're repaying loans. There can't be any. Are there any accounting issues that can affect that could skewer?
No, but there can be like shutdowns, right? So there can be a quarter of higher gold production, right? Higher cost production due to a mine shutdown or maybe some sort of an event that happens. But generally speaking, you normally see a fairly consistent throughout the year. Yeah. Accounting for, of course, inflation for costs.
Right. So RSG, if you're in it, you like gold, it's a hold. So you've got two out of here. You've got obviously Newcrest. Unfortunately, that's got taken over, or it's under offer at the moment. But RSG so far looking the best one, Wolf, out of these ones that have stayed.
Cost-wise, absolutely. So, and even maybe the chart-wise, right?
Oh, definitely. It's funny, isn't it?
Yeah, there you go. So there's a correlation between the two, right?
And you got little CMM, which Capricorn, where again, this one has got a pretty decent chart, Wolf. It doesn't look too bad at all.
Let's see if that adds up to its production figures and cost figures. So I've got CMM, which is one of the newer ones, 91,000 ounces produced, guidance of about 125,000, understand that. And look at that, you've got a all-in sustaining cost of 1252, right?
Very good.
Again, very good. That's why it's looking decent.
So again, we've got two stocks announced there, RSG, CMM, looking decent. Now, lastly, but not least, a little bit smaller is Red.
Yes.
Obviously, I'm guessing by the share price, expensive.
Not good. Well, let me tell you, it's looking at all-in sustaining costs of 2,055, so not brilliant. But they're looking production guidance to get it down to about 1,750 to 1,950. So, it's heading down the right direction. But again, is it quality? No.
Right. Okay.
Well, we do identify three, right? NCM, which is unfortunately obviously takeover, but you've got CMM, and possibly RSG as well.
All right, let's get. Thank you very much, Wolf. That's good. Good summary of all those gold plays. Thank you very much.
Yep.
And just to recap, three best. Obviously, Newcrest, but that is under offer at the moment. But RSG and CMM, best stories, and also maybe the best charts as well.
Yep.
Going down now to HLO World. Well, Wolf, I love the way it's broken through resistance. Very, very nice. And I think this could be one for, this could be, I think, we're Thursday now. We can wait till Friday. It's only one day, but this could be one for the weekend for Einstein's. You impressed with those numbers?
Yeah, look, I'm impressed by the upgrade that they've come up with EBITDA line. So all the numbers were much stronger than the previous corresponding periods. Of course, remember they're cycling from still probably post-COVID where there was no travel whatsoever. So you expect them to be much stronger. We've seen some of the other players like Webjet and Flight Centre release some good numbers. But also we've seen anecdotal evidence from Qantas and all the other airlines. Everyone's traveling. People are still buying tickets even at $3,000. There's really strong demand for travel, right? So expect that to continue. So HLO, I think there definitely could be even an addition to the portfolio, to be honest.
All right, absolutely brilliant. All right, so Wolf,
I love upgrades.
Well, also it's the right sector, isn't it? The world's coming back to life, Wolf, and this company's obviously taking. You can see it in the share price, and did they raise a lot of money in this period over COVID?
Again, it's a good question. I'd have to have a look. This is where my job has to come into it. I have to have a deeper dive into it, whether it makes all sense, these upgrades. That's why probably I'm going to wait till Friday so I can make my decision whether it's a buy or not. Yeah,
you've got a lot of resistance, haven't you, at that $3? It's the only sort of caveat maybe on this one for a trade. All right, EZZ.
Yep. Something new popped up on my radar, Dave. I don't know much about the story. I was looking through today's quarterlies, and there was thousands of it, right?
I'll bring the quarterly across, right? It's Life Sciences Holdings. It's a genomic life science company with a mission to improve quality of life and human health. Big thumbs up for me. EZZ has a focus on genomic research and development to address 4 key human health challenges: genetic longevity, that's the papillomavirus. All this sort of stuff, right? EZZ is passionate about investing in the future of consumer health through the development of e-commerce. It's interesting, right? But that's definitely good, Wolf.
So look, you've got cash receipts of 11.2, a 30% growth. So that's already catching my interest, 30% growth. I'm looking at positive cash flows as well of 2.8 million. That again, that's really sparking my interest here. So I need to have a look at exactly what they do.
It looks
all that is definitely one to say, okay, well, let's just have a read about it to see what they actually do.
All right. Okay.
But obviously the chart looks very good, so I need to have a look at it like today.
Yeah. So if that looks like that tomorrow, that'll be a sort of I'm not saying I won't use that word no-brainer, but it'll be possibly one of the better looking charts for next week. Mad Wolf.
Yep.
Beautiful looking chart. Was the announcement as beautiful?
Okay, bring it up. I want to show, because I did some numbers on this morning as well, because of course we've got it in our portfolio, and we've been bringing praises of this company. So the only thing that was missing today was an upgrade, right? So I think that's what everyone is expecting, another upgrade from Meta. There was one, it was just a reiteration of guidance. But if you look at the numbers, right? So they talked about 580 million last upgrade, 580 million in revenues, and I think 37 million in profit. So the numbers right now stand at around $400 million in revenues on quarter 3. So they only need an average quarter next quarter to hit that guidance already, right? So I think they'll definitely hit that guidance. I think 580, and they'll probably outdo it, and maybe hopefully hit that almost 600 million in revenues, and possibly it will have a flow-on effect where everything down to the bottom line will be better. I suppose the only negative I can see out of that, right, apart from not having an upgrade, the only thing negative I can see out of that is the margins going backwards. Other than that, net debt went down. You've got growth across revenue. Total revenue is up 59%, which is actually stronger than the previous update. So all that points to still they're going extremely well, just through pretty much organic growth. So definitely holding to this. If there's any weakness, I'll probably be looking to accumulate more, because like I said, you've got 2 more months left of this full year, and they're still going quite strongly. So I'm expecting comfortably hitting the last upgrade, which was 580 million in revenues.
Okay. Thanks for that, Wolf. So definitely, well, technically a hold and fundamentally a hold.
Yep.
I've got ALD with a little buy signal, Wolf. It looks like this. Definitely, if it looks like this, be a no-brainer for Einstein's. But were you happy with the announcement?
Dave, the key thing for me was the refiner margins, and they were strongly up, about 40% up. So really up, good positive update. This is a hold, and if you don't have it for a dividend, it's a buy.
All right, big call there. All right, so a dividend buy. I just have a look. What dividend have you got these on at the moment, Wolf? About 8.83%. That's I think maybe that's a little. It's fully franked, maybe. Grossed up, it's a little bit more, is it?
It is 10.35 fully grossed up.
Oh my gosh.
On a 10p. So, you've got a pretty decent dividend payer here. That's going quite well.
All right, excellent. So there's definitely a dividend buy. We'll put that one on, so everyone can see it pretty clearly. DUG, Wolfie, it's still struggling to break over $1. You can see it's a bit of resistance there. Do you think the announcement was good enough to push it over the line?
I think so, because the revenues are incredibly strong, Dave. Even though they didn't have as strong as the previous quarter, it's still incredibly strong. I'm still trying to understand where is this all coming from. So I'm going to have a proper read of this as well. So there's a few things I need to go over the next couple of days. But you can look at revenues at 12.7 million, 55% growth. Again, you gotta really have a look at this, because you've got positive cash flows as well. So overall, something we need to understand.
Yeah, and these sort of companies, I suppose the most important thing is to see who's giving them the work, isn't it?
Yeah, well, exactly, because it's just come from nowhere. So is it one-off? Is it something that's just 12 months and that's it? This is where we have to come in and decide what's going on here.
All right, but if you're in it, it's obviously it's looking like a hold. TLX Wolf, still I think it's good price action. It's had a huge move up, nearly 25% last week, and it's holding up very, very well. Were you happy with the announcement?
Oh, look, it's just a little acquisition out of Austria in the AI space. So, it's not going to dent the cash pocket at all, because they've I think it's going to pay like $2 million. So it's nothing, but it just adds something for their future in the AI space for them moving forward. So, it's an announcement, but really not too important at this stage, I don't think.
SDR Wolf SiteMinder, I know you actually this is below trend, and obviously it's not looking good technically, which I'm surprised, because it was about 2 months ago I had a superb announcement and everyone thought this was off for the races, and since then it's come back down below the water level.
This is all reflection on, we had a really good month or so on the tech space, because the risk were easing off, and then the risk came back on. This is on the back of course, the banks failing, and down she goes. And that's not probably the only one. There's probably a few riskier stocks that went below the trend because of that banking sector scare in the US and Europe, right? So understandably, but when you look under the bonnet, nothing's changed. In fact, they're coming up with really good quarters. So fundamentals and technicals are really far apart at the moment, because the company's delivering, and we know that the travel space is actually very, very strong. So you expect them to come up with a pretty good quarter, and they have. So, you know, it's just one of those things that technicals say no, fundamentals say yes.
Yeah, well, technicals make you money, fundamentals.
I quit then. If they don't make money, so I'm out.
RWC, Wolf.
Yeah.
Struggling to get over that resistance, which how many times do you see that? You get those old resistance lines, it just struggles to get over them. Can it?
Not on that announcement. It just wasn't strong enough. So I think maybe there's a bit of probably now profit taking. We'll probably come back to the blue trend line, Dave. So for me, look, it's a decent story, and I wanted to see where it's at with its recent update. It's not bad, but definitely much stronger growth stories out there that probably we should be chasing.
Right, ARX.
Yeah, look, I'm liking this. Like I said, I mentioned about last week about ARX that it's probably the best positioned valuation grounds in that space of wound healing and skin grafting and so on. So for me, that sort of stood out. And today's announcement was exactly what they're going to say they're going to deliver. About 60 million odd in revenues, looking to be positive EBITDA. So everything they said, they delivered. And I'm now intrigued to see what they're going to come up in May, because they're going to come up with their full year results in May and their outlook. Because if they're going to come out now, we're going to be profitable. And this could be one to watch, definitely on your watch list, because I like the story.
All right, BKL.
Mm-hmm.
Blackmore's eventually, Wolf. It's had a like 4 or 5 years ago, had a tremendous move up, and then it's been struggling for a while now. And takeover offer by a company called Kirin, which obviously an Asian company. And guess what, Wolf? Surprise, surprise. We wondered why it had a buy signal, right? That was the first buy signal it had really for over 2 years, and I wonder why.
Yeah, the insiders, we knew exactly what was going on, didn't they?
Yeah.
Thanks for letting us know, everyone. But anyway, look, $95 from Kirin. And I saw that the management unanimously accepted that bid, $95. So I'd say, unless there's another bid coming from someone else, and look, it could be, because this company is actually overall pretty good. I mean, it's got a good brand name in its space. So, if there's more value to be extracted, and somebody will know much more than us, then yeah, I'd probably be holding it, and maybe I'd not be selling, because this is already accepted, right? So I'd say it's a done deal almost on that premise. So I'm just going to be probably hoping that now you've got someone else comes in with a higher offer.
And CAA, Wolf, which is a dividend play. You're reasonably happy with the announcement, as long as it holds above that 7. Happy to hold it as a dividend play.
Yeah, look, this is interesting, isn't it? Because the chart's saying sell, technically, I suppose, but they actually delivered a very good quarterly. They reiterated their guidance. They're actually ahead of their own internal targets, right? So everything was positive. The only thing is they had to say in that announcement was that the market for them is deteriorating. So presumably over the next maybe quarter or so, you might see a further reduction in maybe revenues and profits. So, if you're looking, obviously playing that dividend line, Dave, and probably when you're looking at the long-term charts, which is the monthly, you're still a hold, but you'd probably be nervous. And maybe on that announcement, you think to yourself, maybe it's time to find something else to play with.
Yeah, or just play by the monthly chart, right?
Yeah, but I can't see it jumping when they say that the things are deteriorating, even though they've held the line and said we're doing better than we are because we're such a good company, and they are a very good company. So it's one of those two forces playing against each other. One, they're going well, but they're saying the markets are getting worse.
But on a P of 3, I don't know if that's factored in.
There you go. I mean, so what do you do? Does the chart saying it's going lower, or
just
good enough?
But just play by the charts below 7 on a monthly, then you get out.
Fair enough.
Both BMT. Yep. So just needs to do a little bit more on the technicals to be happy with it. Far away. Give us
Yeah, look, it's not bad. I don't mind this company. We've been following for some time, on the sides, maybe had a trade or here or there. It is a one that's growing. I think organic revenue is about 24%, overall 50% growth in the medical space. So look, I don't mind. I put it in the same basket as maybe an Alcidion or M7T, where it's got that runway of growth. It's obviously treated a little bit better than an ALC, which we'll talk about in a sec. But is it there yet for me? No. I'd probably need to see another quarter or two before I'm much more comfortable with it. So for me, I'm definitely watching it, but just needs to do a little bit more for me. I just need to see probably more cash flows coming through.
All right, and the charts just want to see a little bit more. Now, lastly but not least, ALC, because we've had a history with this story, Wolf, and ever since it's broken trend, although you've liked the story, it's just really struggled, hasn't it, to get going. Now, you weren't that happy from what I gather with, you weren't that disappointed, but you weren't.
Well, bring it up. Let's have a look at the announcement, because you're absolutely right. There was some happy stuff and there was some sad stuff in there. And so unfortunately, the market's focusing on the sad stuff, right? That's the problem here. The market's actually focusing on the sad stuff. So if you look at the positives, there's two things on there. So based on the current data balance and what you're saying, contract Q4. So we're looking for the last quarter of the financial year. Is expected to be the strongest quarter for cash receipts this year. That's a big plus, right? Is the market looking at that? No, because I'll show you why they're not looking at that. Also, very, very important is saying current cash balance alongside contracted revenue ensures Alcidion will not require any further capital to fund operations. So there's not really capital raising. That's what they're saying here. So are you happy with that? Yeah. So that's the two very positive stuff on that, right? So where's the negative? The negative is negative operating cash flow, 0.8, and so we're obviously expecting a positive cash flows, but they negative, small negative. But the other thing is they're talking about that due to some timing issues out of their control, it means they're probably not going to hit the guidance on EBITDA. So the market's really focusing on that, saying, okay, you're not going to hit your guidance on EBITDA. You're going to be slightly below that, short term, right? Because that's what the markets do. So it's going down. So this is where the frustration comes from. Small company, timing issues of some of these cash flows, which is probably expected anyway. What do you do? I mean, the market's saying no. Fundamentals are saying it's actually not that bad, guys. It's actually going okay with a bit of timing. So possibly next year, it's going to be pretty good because those unrecognized cash flows will probably flow into FY24, right? Short-term pain for long-term gain, perhaps. Yeah, but what do you do? Market saying, sorry, right now you are just not delivering, and that's what we have to deal with right now. I mean, if you look at that numbers, this is where the outlook here, right? So at the end of Q3, Alcidion had 36 million contracted revenue expected to be recognized in FY23, with a further 0.5. Like I said, it's not that bad. It's actually okay. But it's the timing of the EBITDA and stuff. So that Dave, that's the down she obviously goes on that short-termism of the markets, unfortunately.
Yeah, but I'll tell you what, it still seems to me, down 9% today. It seems a little bit pathetic that we are the way we are. I mean, this is why charting in Australia is so important, because we're so short-term focused here, aren't we?
100%.
In the American market, they'll value that very, very differently.
Yeah, look, I think the Americans will probably look at the outlook, right? Saying, okay, so FY23 might be a little bit short on what the expectations were, but when you look at it, was there something in the out of control? Possibly a little bit, right? And FY24 seems to should be better than that. So you should probably be looking at FY24 instead of FY23, but not here in Australia.
So I think this will bounce. I think this will bounce by tomorrow. I think it's not brilliant, but I think it'll hold above that 10 cents. Yeah,
look, it's the thing for me, Dave, here is because of the short-termism of the markets, right? It could, and the other problem is just low liquidity for some of these smaller cap stocks. if the market decides that, okay, we're not interested, we're going to come back in, say, 3 months' time, this could dip lower, for example, and it's going to be a much harder time to get back to that 10 cents again. So we got to, you know, I think, yes, we probably should have been out earlier. I agree, right? If you are still holding this, I think you've got no more excuses at 10 cents. So if it's below 10 cents, Dave, I think we just have to pull the trigger and just take it, and then come back to it when the market's happy again, because it's hard to play the momentum when there is no momentum. And, you know, because Australia is such a smaller place than America, the momentum might not come back for 6 to 12 months, for example.
Yeah. And what's the sort of total revenue then, annual revenue of
Well, it looks like they're going to should come in between the 36 and 40 million.
Okay. Where market cap and they're trading what sort of about 120 million revenue at the moment.
Yeah. So, you know, metrics say they're cheap right now on these things, but like I said, you know, can they get cheaper? Yeah, of course they can. And that's the problem here, where, you know, you're standing in front of a moving train, and the moving train is going backwards right now. So you're going to get probably, you know, smashed. So look, I'm hoping we're right. The fundamentals will win out, and they probably will eventually. But, you know, and I'm hoping it's going to bounce, like you say, and hold the 10 cents. That will be ideal for us, and we don't have to take the loss. But if we do, I think the 10 cents, as you can see, there has been 10 cents some support over the last 2 years, and that's the last respect we've got for this. You know, even though we probably should not hold it, that's the last. We cannot make any more excuses. And
tell me something, what's the when I just find it really interesting the way we value, and you look at Pro Medicus, sort of a market darling. What sort of revenue are they giving out?
It's a good question. Let me have a look on what revenues there. Okay, but, you know, it's hard to compare PME with something like.
No, it is, but I know Claude tends to think it's maybe one of the ones nearer to PME if it could get going.
Yeah, look, obviously they're profitable, right? So that's one thing that's obviously PME is going to be much better positioned. But if you're just looking at revenues on their own, let's have a look. Hang on, I'm going to go back here and I'm going to put it on, and I'm going to have a look for you, Dave, because you asked the question. So I'm going to answer it for you with the revenues, and I'm going to have a look at the February announcements. Okay, interim results were 55 million revenues from ordinary activities, right? 57 million. So let's say annualized, they're going to be 120 million, let's say, right? Versus say 40 here.
Okay, so ALC's got 1/3 the revenue of PME. I know, I'm just interested, and PME is trading at 6.5 billion market cap, and ALC is trading at 120 million. I don't know. I think it just seems. I don't know, Wolf. It just seems.
It's bizarre, but you know what? Then you have to look at the context of it, where on 50 million of revenues, they're still making 27 million profit PME, right? Yet ALC is loss making. So that is the key. It's probably not the revenues; it's the bottom line, and that's why PME is a market darling forever and a day.
All right. So, and you know, with ALC going down, does this start getting now under the radar of people?
Well, it's probably flying under radar for the last probably few months, right? So they need to come up with a positive announcement somewhere along the way to arrest this. I think that's the key here. But like I said, I mean, the momentum is still there for people to sell, unfortunately.
All right.
And this announcement, even though there's positive stuff in that, is it enough for it to arrest it down some momentum? Probably not.
And like you said, at the end of the day, if it does close below 10 by the end of the week, you can always buy it back again, right? If it jumps back over the trend line.
Exactly. So, you know, this Dave, at the end of the day, we make our choices, you know, or we make our strategies at play. So we are prepared to lose some money sometimes, unfortunately.
All right.
You can't make money all the time.
Okay. All right. Listen, we've gone for a lot of stocks today. I just want to recap. CMM, RSG performed very well in the gold sector. HLO is certainly looking like a pick of the day. EZZ could look very, very interesting for trade next week. MAD, if you're in it, hold it. ALD, it's certainly a dividend buy. DUG looking good. TLX looking good. SDR, it's not trending, but Wolf was happy with the announcement. BKL looks like it's sold. ARX, good company. BMT just needs to do a little bit more. And unfortunately, ALC, if it's below 10 by the end of the week, then sell it. Wolfie, thank you very, very much for going through today's reports and announcements. Very, very helpful, sir. Thank you.
Can I go to sleep now?
Well, you didn't ask me what that house was behind, by the way.
Oh, that looks interesting. And I think it's
well, you say you love France.
Yes.
Well, that's the most expensive house in the world, which is in Paris, just here. What do you reckon? I don't like it. It looks like a.
I'm more concerned about you, Dave, because I'm seeing you wearing a tie. So that's just like completely thrown me out.
Mate, even worse than that. My wife made me. I had my suit on because I've got to go to a meeting, but she made me hang up the washing. I said, "You don't do the washing in a suit." She said, but you know who the CEO is at home, don't you?
Yeah, well, exactly. Did you have to iron your own shirt as well?
Yeah, I did as well. Bloody hell. Oh,
where's this world coming to?
I know, it's terrible. All right, see you, Wolf.
See you guys.
Bye.